Closing Snap team. I am here with Scott Snap. We have had a lot of questions about the changes in condo financing, and Scott is going to break it down for us today. One of the changes has to do with condo waivers. Can you tell us about that?
In the past, if it was a small condo association, 1 to 4 units, there was no review whatsoever. You just went through just like a single family home. They've actually expanded that now so that if the condo association just has 1 to 10 units, there's a waiver and we don't have to worry about all the condo approvals. Unless the asterisk to that is unless that small association is actually a subsidiary of a bigger one, then the rules are off. So that's a big change.
And there was changes to the limited reviews?
That's correct. So in the past, for as long as I can remember, if someone was buying a house and they were using conventional financing, if they were putting at least 10% down, they got what was called a limited review, which was a little bit looser on all the condo rules. Those are now a thing of the past. There are no more limited reviews, so all the condos have to abide no matter how much they are putting down.
What are the changes to the insurance requirements on condos?
So the insurance industry has been trending towards, especially with roofs, going to actual cash value insurance policies versus replacement cost insurance. And that has become a battle between lending and insurance companies. The lenders have given in, Fannie Mae gave in, and they said now on the condos, you can actually have actual cash value insurance on the roofs of the entire condo development.
And this is a big one. What are the changes to the condo association budgets?
This is probably the biggest change, and this is to the negative, right? In the past, the associations had to have a line item in their budget that said reserves. Okay? And some of the pushback we got from associations in the past for different things was, well, we have $1 million in reserves, so we no longer budget for it. Non-financeable. Okay? There's no little gray area asterisk. There's no more limited reviews. So in the past, it used to be they had to have a line item that said reserves, and it had to be equal to 10% of their income. That has been increased. It's now 15%. This is important, and this is a guide because a lot of times once you turn a document into the lender, there's no going back. You can't get the genie back into the bottle, right? So even though some of the associations will have a line item and it may say roofs and repair, because that's what they used it for 10 years ago, they just never changed the label. That won't fly. And this is a guide for everyone. We can read that and go, that's probably their reserves. We can reach back out to the association, ask if it is, could you just change the label to reserves if that's what it really is, and we're fine. But you won't get that far with a lot of lenders, so this is kind of a tidbit for everyone out there. And for the association, you need to bring this up at your next board meeting because we'll have no more limited reviews. Everybody that buys a condo and goes conventional, unless it's a 1 to 10 unit project, that budget, when the lender sees it, has got to have a line item on there that says that 15% is set aside out of their income for reserves. It's imperative. These changes have to happen.